Welcome back, YouTube fam. Here we go again. Now, change of scenery today, and I hope you like it. My friends, you've seen on my channel that I do deep research on macroeconomics, company fundamental analysis, and US-China investment strategy. Well, today we are broadening out the scope of the topics that I usually talk about to include one of the most valuable technical analysis tools that I have learned from the CFA. And then we're going to apply it into some real-life scenarios. Now, I know that most of you would prefer fundamental analysis in your investment decision making. Me too. But I can sense that the investment environment is getting more tricky, so I just want to help equip you, my friend on YouTube, with as much knowledge as possible to stay ahead of the curve. So if you enjoy what you learned today, then definitely join my growing YouTube fam by turning on that bell, and let's get started. Email list down below if you want to get some exclusive channel research in the future. So my channel eventually will cover nearly all aspects of investment strategy, from fundamental analysis to macroeconomics to portfolio strategy, and now to technical analysis. And today we're talking about the MACD indicator, which is one of the most popular trading indicators that investors use. And coincidentally, also one of the items tested on the CFA exam. Now, I'm going to help you understand this indicator, the math behind it, how it works. Then I'm going to talk about what stocks it usually provides better signals for and what stocks it might not work as well on. So to provide some examples later in the video, I'm going to be applying this indicator on Zoom, Roku, and Alibaba alongside some of my usual tactical commentary. And I will talk about this from a perspective that isn't usually covered on pure play technical analysis channels because I incorporate fundamentals and macro into my research. So you guys ready? Let's do it. First off, I'm going to explain what the MACD is, which stands for Moving Average Convergence Divergence. It's one of the most popular indicators within technical analysis. It's used to study momentum and the durability of the trend. Now, fundamental analysis can help us understand what the value of a business is worth, but technical analysis can potentially help us understand the sentiment behind the price action of a company's stock. Now, I'm going to pull up my TradingView account here to show you. There are several components to the MACD. Now, you can see that on this chart of Zoom, you can see that there are two lines in the MACD indicator. One of them is blue and the other is orange. Now, the blue line is called the MACD line, and it's quite sensitive to price changes. The way you calculate it is to take the difference between the 12-day EMA, which is short for exponential moving average, and subtracting it by the 26-day EMA. And the orange line that you see here is the signal line, which reacts much slower to price changes. And here's why. The way you calculate it is it's the 9-day EMA of the MACD line itself. In addition, you can see here that there is a histogram where there are both green and red bars. And this histogram is formed when you subtract the MACD line from the signal line. Now, the gap between the MACD and the signal line affects the size of the histogram. The larger the gap, the larger the histogram, and the greater the directional momentum. The zero line is the center of the MACD indicator, where it indicates no clear trend. Now, here are some takeaways that beginners can use immediately. If the MACD line crosses above the signal line, it means that the market could be experiencing upward momentum. If the MACD line crosses below the signal line, the market could be signaling that it's entering a downtrend. Now, as the histogram gets bigger, the momentum also gets stronger, and vice versa. If the histogram gets smaller, then the momentum also gets weaker. So a major key takeaway for beginners is this. Traders use the crossover to detect whether the direction of the trend has possibly changed. Now, that is the basics when it comes to interpreting the MACD line, What we'll do now is understand a bit more deeply what the MACD can do for us when it comes to understanding momentum in relation to market structure. So let me first define market structure. When it comes to understanding price action, we want to understand the concept of support and resistance. Support represents price levels that an asset has not fallen below for a period of time. You can draw a line for the recent lowest low to understand support. Resistance, on the other hand, is the level at which sellers will most likely want to sell at that price. In technical analysis, a simple resistance level can be charted by drawing a line at the highest highs in the time frame considered. Now, how strong the price moves into support or how strong it moves into resistance is measured by the MACD. And combining the MACD with fundamental analysis can help us understand whether the price is likely to stay above or stay below resistance. And I'll show you some examples later in this video, so hang tight. Now, there are some mistakes that I believe investors make when they first use the MACD indicator. One of the most common mistakes is that traders use the MACD on its own without considering the overall trend. And an example of this is if you have a market downtrending while the MACD is bullish. Now, using only the MACD to trade against the trend could be very difficult unless your investment thesis incorporates fundamental analysis into your outlook. Now, one way to make sure that you understand the trend is in place is to apply a 100 EMA, which is the 100 exponential moving average, onto the price action chart so that you can confirm the direction of the trend. If the price is above the 100 EMA, then the longer term trend is higher. And you should look for crossovers from the MACD over the signal line to enter a long position. If the price is below the 100 EMA, then the intermediate to long-term trend is still lower. So to find additional opportunities to short, you can look for negative crossovers from the MACD. Now, some general tips are that using the MACD indicator tends to work better in trending markets. If the market is range-bound with a lot of volatility, the MACD many times produces false signals. In addition, when it comes to using the MACD, using the right time frame is important. Here on TradingView, you can use several different time frames. Time frames can range from one-day charts to as intraday as 1-minute charts. Now, I personally prefer the one-day charts because my holdings are at least intermediate term to longer term in nature. For people who like to trade on shorter time frames, you can also use the 1-hour chart or even the 1-minute chart if you are scalping the market. Now, an important observation is that depending on the time frame you choose, you will see differences from the conclusions of the MACD crossovers. So as an example, if we look at this Zoom chart, you'll see that the MACD crossover is clearly negative on the 1-day chart, but it's actually positive on the 1-minute chart. What this means in plain English is that on an intraday level, there's actually positive momentum. But from a zoomed out perspective, the intermediate term momentum is still clearly negative. So this represents a shorter term recovery inside a longer term downtrend. Now, I'm going to apply this technical analysis with the MACD on some of the most controversial picks right now, all of which I own, by the way. So let's see if the MACD is a crystal ball for what is to come. We're going to talk about 3 companies: Zoom, Roku, and drum rolls please, Alibaba. First, Zoom. Okay, here I am with the Zoom price chart with the MACD indicators below, and I'm going to walk you through the Zoom MACD and what that meant for the stock all throughout 2021. First, let me give an overview of Zoom's investment narrative so that you have some context. The company's video conferencing product was globally adopted during 2020's pandemic and stay-at-home order. We all know that. With the reopening in 2021, the revenue growth has tapered off because of slowing user growth, now that people are spending more time in in-person activities. Now, businesses with over 10 employees are using this product more, but the growth story is offset by individuals who are potentially churning the subscription. Now, this video is not a deep dive on Zoom. So I just wanted to provide some context. Now the chart here in 2021 for Zoom is in a deep downtrend. So let's see what the MACD has to say for Zoom. Now, throughout the year, there were 11 MACD crossovers for Zoom. And you can see that during the MACD crossover, the momentum for Zoom did in fact shift. Now, not every single crossover is going to be a signal that's profitable for a long or short entry. In fact, you can see that there were 5 times that the MACD line crossed over the signal line to, in theory, indicate that a rally could be emerging. Now, out of these 5 times, it appears that only 3 of them were powerful signals of a Zoom rally. In other words, the signal seemed to work around 60% or 3 out of 5 times for Zoom. January 2021, May 2021, and October 2021. Allow me to explain. Back in January 2021, there was a large macro rally at the beginning of the year where all the indexes hit all-time highs, and Zoom participated in that rally. Now, earlier in May, you might remember that there was a vicious rotation from growth into value, and when that rotation turned around, Zoom was able to benefit from that recovery. And then just most recently in October, when there was a significant rise in the 10-year yield and how that dampened sentiment on tech stocks. Zoom was one of the stocks that was hit very hard and also recovered briefly during that time frame. Now you can see that each time Zoom rallied at least 10% in a counter trend rally compared to its longer downward trend in 2021. Now, when I said earlier that you needed to be nimble with the MACD because it's a trading indicator, this clearly applies to Zoom because since Zoom's fundamentals is being hotly debated right now, the MACD may or may not indicate that it is like a long-term short or even a long-term buy. It is at best a trading indicator. Now, I actually wrote a Seeking Alpha article during the May 2021 sell-off on Zoom when it was around $290 a share. And ironically, at the time, I hadn't even used the MACD indicator. It was just simply not a tool that I used in my investment research process. My article was based on fundamental analysis. And it just happened that within 2 months, Zoom rose 30%. So because of that rally, which happened in a short period of time, I ended up taking profits on 1/3 of my position. Now, the MACD indicator at the time showed that the trend could reverse back in July 2021. And unfortunately, technical analysis was not one of the major tool sets that I used for decision making. I'm mostly a fundamentals investor. So I held the rest of the position with a view for the long term. And had I known about the MACD, I would have trimmed my position more aggressively. So net, even though I sold 1/3 of my position at $385, which is a beautiful price in relation to the price today, the position is still at quite a sizable net loss, but that's okay. I'm a long-term investor, remember? I don't judge how my position does just 10 days after I talk about it. But hindsight is 2020. And I urge my YouTube friends to continue learning, like my video here, to equip yourselves with more skills to enhance the probability that you survive in the market. Remember, you want to think about surviving first and thriving later. So what's next for Zoom? Well, you can see that the MACD shows severe negative momentum since the MACD crossed the signal line in a bearish pattern. This means that anyone trying to buy the dip after earnings is taking quite a lot of risk from the one-day chart. Now, day traders were able to use the 1-minute chart to find opportunities post-earnings, but the shorter your time frame, the higher your risk tolerance needs to be. So the longer-term technical picture still suggests that it takes time to recover. I rate Zoom as a stock that for now, people should be very cautious with. If you're very bullish on the fundamentals, dollar cost averaging into the company slowly is going to help you avoid another downward draft lower. Now up next, we've got Roku. And in 2021, the Roku chart presents us with 12 clear MACD crossovers. We have to exclude the crossovers that happened during the stock's range-bound movement because that's going to produce false signals. Now, we all know that Roku is also another hotly contested stock. Bulls like me contend that their strategic positioning will turbocharge their average revenue per user once they can get account growth back on track. Bears make a legitimate point that competition is serious enough to cause Roku structural losses in market share. And I respect that argument, but ultimately we won't know which side is correct until we see whether Roku's original content channel succeed or not. Obviously, I'm holding out for the bull case. So that's the quick summary for Roku. If you want a deeper dive on the company in terms of fundamentals, you can watch the latest fundamental analysis video I made for Roku here, or also read my research on Seeking Alpha. Now for the MACD application. With the stock as volatile as Roku, you can see that there have been numerous crossovers throughout 2021. Trading with so many signals would be exhausting for investors, so it's best to combine technical analysis with fundamental analysis here as well to know that your signal is right. Now you can see that in May 2021, when US equities finished that vicious rotation of growth to value and the pendulum swung back to growth, Roku's MACD crossed over the signal line. That was a massive entry signal at the time, which would later take Roku from the lower 300s to the high 400s. Now, above $400 per share for Roku was when expectations and valuation became too high. At today's valuation and at today's price, the expectations have come down to a point where the company can exceed expectations again if they execute well. Now, the August 2021 MACD crossdown was a valid signal that Roku may have peaked in the intermediate term. And that's exactly what happened at the time when there was excessively high valuation and investor euphoria. So those fundamental themes combined with the MACD indicator signaled a top for Roku. Now, as of now, the MACD is indicating bearish momentum for Roku, so this is not necessarily a quick turnaround story. I'll be monitoring to see how this plays out. Now, Roku has bearish near-term technicals contrasted with promising long-term fundamentals, so you have to choose which story you're going to buy into, the weak technical story or the longer-term fundamental story. Ultimately, I think bulls prevail in this one, but you do need a strong stomach for risk if you want to ride Roku and other high beta names to their full potential, especially since we're entering a tightening economic policy where the Fed is looking to raise rates in 2022. Lastly, we have Alibaba. Now, Alibaba's volatility in 2021 has made the MACD cross above and below the signal line close to 15 times this year. The sheer quantity of signals also reduced the quality and predictive nature of the MACD. Now you can see that for Alibaba, the signal accuracy of the MACD is not as strong. In fact, it's quite misleading. You can see that on many different occasions, the MACD crossing over the signal line did not result in Alibaba's share price increasing. There was, however, a big MACD crossover in October, and around the same time I talked about buying the Evergrande dip because I did not believe that it would affect Chinese internet and US tech, and you can see that Alibaba, along with Chinese equities, performed very well in the month of October. But here's what I have to say. When I made my videos for Chinese equities earlier this year, I actually have not put that much time into understanding and dissecting the MACD. It's only recently that I heavily researched this indicator and it was brought to my attention. So while I do find technical analysis very helpful, my main investing strategy still relies on fundamental analysis. So you can see that for Alibaba, you needed to do deep political research, fundamental research, and understand technical analysis for the chance of catching the trend higher or lower. And in 2021, it seemed that out of the 15 indicators, only 2 times was the MACD producing a very clear signal and being right on the spot. Back in February when Alibaba peaked, and in October, just a couple months earlier, when Alibaba rallied from 140 to 180 per share after Charlie Munger announced that he had doubled his stake. On almost every other occasion, though, the MACD was a signal that wasn't very effective for analyzing BABA. So what's the main takeaway from my 3 examples? Well, I want to let you know that based on my research, I think that the MACD works better on US equities where there aren't regulation surprises as much and there is a more predictable political infrastructure. Chinese equities can provide significant levels of alpha, but sometimes you need to treat these stocks as big swing trades and not necessarily buy and hold, unless your time frame is ultra long, like 3 to 5 years. Most of us, to be honest, think about time horizons in terms of the intermediate term, in terms of months. We'd like to think that we think in years, but we don't. Let's not kid ourselves. Sometimes the day after I post a video and the stock drops, I see people commenting in my comment section about how this video didn't age very well. Well, I'm not going to fault anyone for commenting, but I'm just pointing out that it is human nature to monitor the short-term nature of price performance, and the moment we are aware of that, we will become better investors. Now, this next piece is where it becomes my opinion. The greater the debate between bulls and bears, the more controversial the name is, the less likely the MACD is going to work. And the reason I think this is that the MACD is already a popular trading tool, and all institutions use this momentum indicator. They know retail uses it as well. Just look at all the YouTube videos made on the MACD. Institutions have the buying power or the selling power to directly influence the MACD with their trades. They know that retail investors are likely to buy at certain signals, and they have the power to invalidate that indicator if they wish. So if a name is hotly contested or a name is really heavily owned by hedge funds that tend to be shorter term in their time frame, I would heavily caution against using the MACD because the MACD, in my opinion, is more suitable for names where there's a clear trend and the market narrative is accepted by many investors. That way, no one institutional investor can influence the broader trend with their trading capital. These names tend to have their trends continue, which allows the MACD to produce clearer signals. Now, if you want to use the MACD in your trading, I use TradingView's charting software in order to complement my fundamental analysis. So feel free to use my link below to sign up for a free account on TradingView and explore the product options that they have. Now, if you enjoyed this kind of analysis, then join my YouTube fam by subscribing and hitting that notification bell. And feel free to leave your email address down below if you want to receive exclusive channel updates from me in the future. And also make sure to check out my YouTube community tab where I make posts in between my uploads on my thoughts on any important insights that I have to share. And finally, in 2022, I will be slowly creating a private investment research community on Patreon where I will provide education, research, and resources for people who want to support my work and benefit from my research. I hope you enjoyed this technical analysis series. Let me know, and this is very important, what strategies you like to use in your trading. I'd be interested to know what kind of technical analysis techniques that you employ in your investment approach. So friends, until my next video, stay safe and I will see you soon.